Hello and welcome once again to the Internet Citadel Show. Great that you could come on board and watch this with us live. We have a jam-packed show. Unbelievably excited about the guests that we have coming on tonight. So without further ado, I'm just going to jump right into introducing my wonderful friend and co-host. She's been an operation manager and a sales manager for over 25 years in a Fortune 500 company. She has network marketing experiences dating back to the mid 80s. She has affiliate marketing experience as well, going back to the early 90s. And beyond that, she's also currently a national marketing and sales director for an up-and-coming bridal shoe company called Bliss Bridal Shoes. I'd like to introduce you to my wonderful friend, great business partner, Kathy Stover.
Brian, hi, good evening. I am so excited, as always, to be here with you on another fantastic jam-packed, like you said, Tuesday night. I, too, want to move on so that we can get our guest and our special guest on tonight, but I just want to share with everybody some information about my friend and co-host, Brian Kelly. Brian has been a software engineer for over 23 years. He is a Twitter enthusiast. He has put together a program that's phenomenal. For those of you that want to take a look, it's down below if you click on Tweet Performance. For over 6 years, he was the co-owner of a travel-based MLM. He's got a lot of great experience. Brian, I really appreciate sharing the platform with you, and I'm going to send it back to you so we can move on tonight.
All right, I'm all jittery because I am excited. The guest we have on tonight is mind-blowing. The fact that he even agreed to come on our show, we're very humbled by it. The reason he came on our show, a big part of it, a huge part of it, the only part of it, is we have a great friend who continually connects us with these incredible speakers that you see coming onto our show. Real brief, I rarely give a good intro about him. I just basically say, here's a friend. I want to give you just a little background so you understand. This man has a lot of background himself. 25 years of large and small scale computer IT administration, project management, and network support starting at NASA and at George C. Marshall Space Flight Center, and working with companies like Gap, Banana Republic, 99 Cent Only, Sports Chalet, Washington Mutual. It goes on and on. This man has got a lot of business experience, and he's incredibly well connected. He's become an extremely good friend of both Kathy and mine. And without further ado, I'd like to bring on our friend who is going to introduce our main guest, and that friend is Mr. J.W. Najarian. Hey, J.W.
Hey, J.W.
Hey, guys, thanks so much. First of all, I got to spend a marvelous weekend with you guys. Thank you so much. We all went down to, where were we? We were downtown Los Angeles and went to a seminar, and it was just absolutely unbelievable. It was really a great bunch of fun, and I got to spend a lot of time with you, and that was great. I am absolutely excited tonight. There's a gentleman I've actually seen many times on some very large stages. We're talking 1,000 people at a shot. And the first time I saw him, I ran for my notebook because he started putting out so much incredible data that I just wrote the whole time and just filled up all, I don't know how many pages full of notes. I heard him maybe 2 or 3 more times, and every time he came out with more and more brilliant stuff, and I just had to get to know him. I met Jordan, and he has turned out to be such an incredible and wonderful. He's a wonderful friend. He's a warm guy. He's a nice guy. I work with a lot of gurus, and he's one of the few guys that answers their own phone. He's always been there whenever I've asked him to show up. He's been there for me, and that's pretty incredible because he's a really, really, really busy guy. Jordan, let me give you the regular bio on Jordan. Jordan is known as America's Money Answers Man for a good reason. He's been answering America's questions about personal finance for over 30 years. He's the author of, my bio says 11 best-selling books. It's now 13, and he's going to tell you about his new book, the new book on debt that he just came out with. And he usually writes on personal finance, including Everybody's Money Book, Reading Between the Lines, Master Your Money Type, Fast Profits in Hard Times, and many others. And I've got bunches of them here in front of me. Before I actually met Jordan, I didn't realize, but I had some of his stuff in my library already. And, most authors that say they write books, not very many of them have books that have thousands of pages. Here's one that he wrote that has, I think it's thicker than the Bible. Anyway, Jordan's constant presence on national and local TV and radio shows, commenting on financial topics. He hosts the weekly Money Answers radio show on Voice America Network, the largest internet radio network in America. He was the weekly financial analyst on NBC News at Sunrise and Public Radio's Marketplace. Morning Report for many years. He appears frequently on CNN, CNBC, Fox, and other TV networks. Jordan's in big demand on stages and on programs all across the country. He just did Neil Cavuto. He's on his way to go do The View the end of this month. And so that he took some time out to be with us tonight. We're so honored and so excited to bring you the wonderful and astounding Jordan Goodman.
Glad to be with you.
Hey, Jordan.
You went on too
Hi,
long.
Jordan.
Great to be with you all. You went on too long, JW, but they got the idea. What I like to do is help people with their finances in every way possible. And you're right. Tonight I'm going to give out lots of specific websites, 800 numbers, practical things people can do. Because if you do it right, these are absolutely the best of times. Might not seem that way, but if you do it right, it's the best of times. If you do it wrong, it could be the worst of times. And I want all the viewers tonight to make this the best of times in their investments, in dealing with their debt, and real estate, all kinds of different things we can talk about.
Great. Always love to hear a positive message. Go ahead,
I
Kat.
was recently having lunch with a friend of mine, Jordan, and it was interesting because we were talking about how times have changed. And with that, what I mean is, a few years ago, if your house went into foreclosure, if you lost your job, it was like really taboo and nobody wanted to talk about it. You kept it very secret. And now I find if you're having cocktails or you're out, for a morning cup of coffee, it's just an easy, free-flowing conversation. It's not taboo to say that you lost your job or that your house is in foreclosure. And I'm finding the same thing when we're talking about the kind of debt that we're in. So, I think that it's being more talked about. So how did we get into this financial credit crisis, and what can you share with us? How can we get out of it?
Well, you're right. It was taboo, and the taboo is gone for having financial troubles, I guess you might say. We have 10% unemployment. That's the official number. I think if you actually looked at it, it's like 17% underemployed or unemployed. And last year we had 3 million home foreclosures. We'll probably have a similar number this year. And this is after all the government aid to try to stop all this from happening. So a lot of people are in all kinds of trouble, and they're the ones who really need the help here. As far as how we got into the situation in the first place, basically we just took on too much debt on all levels, on the individual level, on the societal level, and the government level, companies. Everybody took on too much debt at the same time. And whoop, there goes my cat. And that was a tail of my cat, Princess. So people took on debt because it was easy to get into debt. People were being handed, credit cards and student loans of all kinds. Princess, you shouldn't be part of this thing. Okay. People got into real trouble because credit was too available and too cheap. And so that's really where the trouble started. And it's easy to give debt to people, but it's hard for people to get out of debt. So in the peak years, in 2004, 2005, 2006, people were just getting into debt very, very quickly, thinking that this is free money, flipping real estate, speculating in stocks, and it just seemed like it was going to be a party that would go on forever, and it didn't. People were getting into payments they couldn't afford, and they were living in a dreamland, really. And so the people who didn't get out are stuck now with huge debts, and that's the overhang we have today. In the residential market, people were getting the so-called option arms, where you could kind of set your own payment. They were getting into interest-only mortgages, which was good for the first few years, and then the principal kicks in, and your payment goes up to levels you just can't possibly afford. And that's what's happened now, is that the debt, which was very cheap, is now very, very expensive and making it really, really difficult for people to pay it back. So as far as how we get out of it, we have a huge process of deleveraging going on right now, which is very painful. Again, that cheap debt is now very expensive. If you're paying 29% on a credit card, that's pretty painful when it used to be 6%.
Yes.
If you're paying 8% on a mortgage or your house payment doubled or tripled, it's very painful when you thought it was going to be great and your house value was clearly going to double every year, as people thought in Las Vegas and California and Arizona and all kinds of places. So that's really what got us into trouble. Getting out of trouble is a long process of deleveraging. That's a very brief view of how we get out of it.
Yeah, we lost a little bit of audio there with the cattail brushing by, I think. But we are live. We are definitely live. There is nobody that can say we are not.
That's for sure. So how important is it to know where we stand in the grand theme of things? Like, I guess what I'm asking is, what do you provide to set the stage to lead us out and towards recovery?
Well,
because I know you've written several books, and I know you've got something that's just coming out, and it is a phenomenal book.
Just came out this week, actually, called Master Your Debt. And it talks about how to deal with debt in a very positive way. If you do it right, interest rates are very low. If you have decent credit, you can get all kinds of credit today, despite what people talk about. So it really can work out quite well. If you have a lot of debt at very high interest rates and you're being part of the credit crunch, it's very, very painful. So that's the difference between the kind of winners and losers in the whole world of debt. As far as the grand scheme of things, the government is taking on enormous amounts of debt at the time that individuals and companies are cutting back on their debt. On the consumer credit side, people have been paying off their consumer credit every month for the last year and a half. They're using more debit cards than credit cards, which is a positive kind of thing. Companies have been paying off debt and accumulating a lot of cash. So that's good. The only people out there that are adding debt in a major way is the government. Just yesterday, President Obama introduced a $3.8 trillion budget for the next fiscal year with an assumed $1.6 trillion deficit. This last year, we had a $1.3 trillion deficit. And the projections out in the rosy scenario are at least $1 trillion in deficits, basically as far as the eye can see, for the rest of this decade, which means we just raised the national debt ceiling from $12 trillion up to about $14.3 trillion, which will last us to the end of this year, basically. If everything goes the way it is right now, we'll have $20 trillion in debt by the end of this decade. I mean, it's just staggering.
Wow. That's staggering.
The grand scheme of things, you should say, is the amount of debt we're adding. And at the moment, the government is able to finance those huge debts at very low interest rates because the government here is considered safe and people are willing to buy our debt from around the world. That's not going to last forever. And when that stops happening, and there's already some signs of that, you can see interest rates rise in this country. And we've already had, recently, the Bank of India, for example, said instead of buying treasury bonds, they want to buy gold. So they bought 20 million ounces of gold from International Monetary Fund. China, which owns about $1 trillion worth of our debt, is saying we don't want to do as much in the future. And so people are getting nervous about the dollar already. So I think interest rates could be rising, which is really going to be painful for the government. Right now, we're able to finance these huge debts at very cheap levels.
So, Jordan, what can a regular guy do, or some of these small business people we have on here? What kind of steps can they take? Is it just about saving money, not spending money? That's tough.
Well, that's part of it, but it's really making the most of your opportunities. The scenario I just painted, if you're having a lot of debt and your interest rates are going up, is pretty disastrous. But if you're positioned in the right way, and I'm going to give you all kinds of specific right ways, it is absolutely the best of times. You could do a fantastically increase your wealth a lot in that environment. I'll just give you some specifics right now. As we devalue the U.S. dollar because of all the money we're printing left and right, literally trillions of dollars, you want to have your assets in non-dollar denominated assets that are going to be rising in value. Now, one general class of that clearly is hard assets. So I think gold, which has gone from $300 to about $1,100 an ounce, is going to go much higher in the future. silver, platinum, palladium, those kind of things. Now you can either buy physical gold, or the easier way to do it is to buy gold, so-called exchange-traded funds, ETFs, which own physical gold, own physical silver, platinum, and so on. For gold, the symbol is GLD. For silver, it's SLV. For platinum, it's PTL. And you can buy those just like any other stock. And those, it's a very convenient way to buy gold, silver, and platinum. And I think in the long run, those are going to go higher. Gold today is about $1,100 an ounce. I think it could end this year at about $1,500 an ounce and eventually go to $2,000 and possibly even more. Silver is now about $17 an ounce. That could go up to about $25 an ounce or even higher. Same with platinum. So these are things I think you have a really great opportunity to profit as the U.S. dollar falls in value. The same with other hard assets. When the value of your currency is depreciating, people want to put their money in a hard asset that's going to appreciate. So that would include oil, copper, aluminum, agricultural commodities, real estate, hard assets in various ways. If you want to see a super dramatic example of what happens when you devalue your currency, go today to Zimbabwe in Africa. Okay, you literally, I should have one here, but they have a $10 trillion Zim dollar note, Zimbabwe dollars, $10 trillion. So everybody in Zimbabwe today is a trillionaire, and they're completely poor. Okay, so just $1 trillion doesn't mean you have any value. So in an economy like that, where the money has been completely devalued, people go to hard assets and they trade in gold and cattle, and it becomes a barter economy. That's what happens. Now, I'm not saying we're going that far, but it gives you an example. And don't have to go back to Weimar Germany. This is happening in the world today. When you devalue your currency, people want to go to hard assets. So that's kind of the direction we're going, and that's certainly one thing you can do to protect yourself against what I see as clearly the devaluation of our currency.
This book here, Jordan, Fast Profits in Hard Times, are these some of the things that you talk about in this book and how to go about doing those things?
Absolutely. So, for example, let me give you some more examples. Getting your money out of U.S. dollars. There are CDs that you can buy that are denominated in foreign currencies. There's a bank called Everbank, EBERBANK. You can go to their website, everbank.com, that has CDs denominated in individual currencies like the euro, Australian dollar, Canadian dollar, Japanese yen, Swiss franc, whatever you like. Or they can be denominated in a basket of currencies. So you can buy a basket of currencies related to oil prices. That would be like Australia, Norway, Canada, that are kind of oil-related countries. Or they're gold-related ones. So they're a strong central bank, what they call the prudent central bank funds. So you can get a basket of currencies. So you're buying a CD that is denominated in foreign currencies, FDIC insured, and if a year from now the dollar has fallen against the Swiss franc or the gold-related currencies, your money has gone up, and you still have an FDIC insured vehicle. So there's a very simple thing you can do that's quite conservative that you benefit as the dollar goes down in value.
Is there also an ETF? Is there also an ETF that goes against the dollar?
Absolutely. It's called UDN. The left symbol UDN is the falling dollar ETF. That's correct. If you really want to get fancy, there's a double declining dollar that every time the dollar goes down, it goes up twice. But I'll just keep it simple for you. The UDN is just 1-to-1. So as the dollar goes down, that's going to go up. So that's one way to do it. The other way I think is oil. In the long run, I think oil is going to go up a lot, both for supply-demand reasons, but also because it's a play against the dollars. Even though it's liquid, it's a hard asset as far as I'm concerned. So, for example, in the third chapter of Fast Profits in Hard Times, I talk about the so-called oil and gas royalty trusts that are mostly Canadian. They have very large reserves of oil and gas, 20 or 30 years worth of oil and gas. They pump it out, sell it at the current market price, and pay dividend yields today of 10 to 12% annual yields paid monthly. So if you're having your money sitting in a savings account earning 0, or a checking account earning 0, or a CD getting 1%, here's a way to get 10 to 12% and have it paid monthly. And if oil prices go up, you actually get higher dividends, and your stock price will go up as well. So there's a way right now, and I'll give you some names right now. Penn Growth Energy is PGH, Penn West Energy, PWE, Enerplus Resources, ERF, Baytex Energy, BTE. There's about 20 of them, but those are 4 examples right there. You can buy these on the New York Stock Exchange like any other stock. They're not widely followed really on Wall Street, but here's a way of getting 10% income and higher capital gains and dividends if oil prices rise. So if you go to the gas pump and say how horrible it is that the gas is $3 a gallon, if you now own Royalty Trust, you say, I'd really like $6 a gallon because it's going to make my dividends and stock prices go up. So it completely changes your view of the world when you're on the right side of the trade. So those are just a few examples.
When you talk to people about investing, a lot of people, whether it be Bernie Madoff or some of these others, a lot of people took the highest percentage return and threw most of their money there. What do you say about those diversifying your portfolio?
Definitely want to diversify. I'm not saying put it all in Royalty Trust. There's loads of other ideas in that book that can help you. And there is a website related to that book, by the way, which is fastprofitsinhardtimes.com. Bernie Madoff was giving 9 or 10% returns consistently. Now, when the market was doing really well, he was still giving 9 or 10%. What really hurt people was he was giving 9% when the market was down 40%. And people thought they really had it made. And remember, it was early December, right when everybody was crowing how I'd get 9% this year and everybody else is losing their shirts. And then it turned out to be a complete fiction from the beginning for 25 years. So that people really had a big come down on that one, But definitely you want to diversify. So oil is, there's another thing called, go ahead, Kathy.
I was going to say, we have one of our viewers asking, would alternative fuel resources be considered hard assets?
Not directly. Things like solar, geothermal, they're not really hard assets. They're really systems for creating energy. I think those make sense. As oil prices go up, it makes solar and alternative energy more economically viable. So I think if you want to go in solar, 2 companies I would like would be SunPower and SunTech. SunTech is the largest company in China that makes solar panels and so on. So those would be 2 plays on that. So it's not a hard asset play. It's really more of a play on the alternative to rising oil prices. Eventually, we are going to run out of oil, maybe 50 years or 100 years, but we have to have alternatives ready by then, and so those companies would be long-term growth plays. I was going to mention another way to play these are what are called master limited partnerships, or MLPs. What these do is they own pipelines that have very high dividend yields, typically 6 to 9% dividend yields, very safe, and in this kind of environment, they're going to do very, very well. I'll give you some names of some of them. Magellan Midstream is a big one, MMP. There's, actually I have a whole list of them right here. There's one called, let me just get it right here. I want to get you the right names. Enbridge Energy Partners, EEP. There's another one called Feral Gas Partners, FGP. If you've got the book, page 90, I have a whole list of them right there. And there are actually some mutual funds that have a diversified portfolio of MLPs as well. On page 94, like Energy Income and Growth Fund, FEN, the Kane Anderson MLP Fund, KYN. So if you don't want to pick individual ones, you get a mutual fund that has a diversified portfolio of MLPs. So again, you don't have to sit there in your checking account earning 0 or a savings account earning 0.01%. I've just given you a whole bunch of places yielding 9, 10% that benefit when the dollar falls and oil prices rise. Are you feeling better yet, Kathy?
Yes, I am. Absolutely. A lot better, I can tell you. I've got a question. Because of the job situation and, the foreclosures and all of this, it's kind of hard to keep our credit in check. So with everything that's going on, Jordan, how important is it for us to keep our credit score intact?
Well, it's more important than you think. It's not only about borrowing. People think a credit score, I'm not going to borrow anything, so I don't really need to worry about it. Your credit score is used in a lot of ways people don't really realize. When you apply for auto insurance, your auto insurance rates are often based more on your credit score than your driving record, because they say if you have a good credit score, you're going to be a more responsible driver. When you apply for a job, your employer, potential employer, is going to look into your credit score. When you want to rent an apartment, your landlord's going to look at it. So there's a lot of things beyond just applying for credit that's going to be affected by your credit score. So it really is important in a lot of different ways. And then, of course, the higher your score, the lower interest you're going to pay on your credit in various ways. So here are some specific things you can do to improve your credit. First thing is to get rid of what are called derogatories, or something on there that's negative one way or the other. There's a website you can do that, which is creditreportabc.com. And the good news is, if you challenge derogatories, even in many cases, if they're accurate, you can get them off. There was a law in 2003 called the Fair and Accurate Credit Transactions Act, the FACTA law. And what that says is you can challenge derogatories on your credit report with the original creditor that put it on there. And if they don't get back to the credit bureau within 30 days of your challenge, it has to come off, even if it's accurate. So it's like that time, Brian, you were driving, I think it was at 140 miles an hour on the highway, and they pulled you over, right? But then when you went to the courthouse, the police guy didn't show up. It never showed up on your driving record, right? Was that 140, or maybe I'm lowballing it there.
You weren't supposed to mention that one, Jordan.
But that's the same analogy, right? It's like if they don't respond, then it comes off your credit record. And in many cases,
I wonder how
they
many
don't
people
respond.
do not know that. There's going to be a lot of people that do not know that. That's invaluable information right there in my book.
It sure is.
So that just made your credit score go up a lot by getting rid of derogatories, even if they're accurate. Even if they're accurate, okay? So creditreportabc.com is again a place that'll help you do that. There's a whole process involved. You have to write letters and kind of explain how the whole thing works, but that can help you there. Then you want to monitor your credit on an ongoing basis. Now you can see your credit report 3 times a year for free at a website called annualcreditreport.com. And get one at the beginning of the year, one in the middle, one at the end of the year from Equifax, Experian, and TransUnion. But I like to monitor it on an ongoing basis to see what's going on at any time. And so a website to do that is guardmycredit.com. That's the Equifax credit watch system, where you can look at any time, see if there's anything going on that's funny, know your score, know your complete credit report, and it costs whatever it is, $40 a year or something, but you really want to know what's happening. And if there are errors, you can dispute them right on the spot. And if there's anything funny going on, they will immediately email you and say, JW, did you just buy 12 ostrich farms in Australia or something, And it's like, no, I don't think I did. I only bought 4, And then they can say, somebody's got your credit identity, and you better do something about it. You can put a freeze in your account and stop things from happening. A lot of people have
Jordan.
Things going on, they don't even know about it, so it's too late.
Jordan, what about things like you hear of these companies like LifeLock? Are these companies work? Are they worth the money?
Yes. LifeLock helps you prevent things, and then if you do get hit, they can help you clean up the mess. It can be an enormous mess. I have a link to a lot of these different things on my main website, moneyanswers.com, including a link to LifeLock, which I subscribe to myself, and it's just kind of like a peace of mind kind of thing to know that they're watching out for you. And there's much more than just somebody stealing your credit card, that kind of thing. There's all kinds of, Eastern European identity thieves doing all kinds of weird stuff that you have it's not as though you're doing anything wrong. You just exist, and that's all it takes to steal your identity these days.
I'm glad you brought.
I think LifeLock can be helpful.
I'm glad you brought that up, Jordan, because as home-based entrepreneurs like Kathy, myself, JW, and yourself, you're sitting there at home right now as we have taped this show. But with home-based business entrepreneurs, we're on the internet constantly putting our credit card information out there. Our information is quote-unquote bare naked to the world. How can we actually prevent identity theft when we're doing business on the internet?
Well, certainly use secure sites, of course, and only put your numbers in if you feel it's secure. I mean, it's the best you can do. And then have a monitoring service that will tell you if anything funny happens. The one I use is this guardmycredit.com. It's about the best you can do. I mean, in many cases, your records are stolen where you have done nothing wrong whatsoever. And there's been lots of companies that have been broken into and hacked in various ways. I'll just give you an example of one recently. Everybody who got a lease through Ford Motor Credit, there was one guy who was in the central position for all the information going in, and he was selling people's names at $30 a head and getting, giving out people's social security numbers and all their information. And all you had to do to be victimized was to have leased a Ford car. You didn't do anything wrong and never knew about it. And all of a sudden, they couldn't figure out why all these people were getting ripped off. And it turns out the one thing in common they had was they had a Ford lease, and they traced it to the guy, and then finally found it out. But it's, again, you didn't do anything wrong. You just leased a Ford car, So you never know until you're hit. And then it can really be a mess putting it back together again. Getting your credit identity back, getting all the stuff off is a real pain. That's why LifeLock, they will put your life back together again if you subscribe to something like that.
All right, fantastic. I want to remind everyone that we are talking with Jordan Goodman, author of, and I hope we can all see this, Master Your Debt. Be sure to click on these images beneath us. Go to internetcitadel.com if you are not there right now listening to this show, and click on those links. You'll be taken directly to one of Jordan's websites where you'll get detailed information concerning what's actually in that book. It's a very informative website. Jordan is laying down a bunch of gems right now, absolute gems, but you can get all the details in not only that book, but this one as well that came out just before, Fast Profits in Hard Times, and that is also beneath us, as you can see there. Be sure to click on that. If you click anywhere on Jordan's nose, as we like to say, you will also be taken directly to his Money Answers website. This man knows his stuff. He sent me over a DVD prior to the show, and I was trying to convert it to a video to show everybody just the accolades of this gentleman. He has been on every television station known to man. He hasn't actually been to every one, but it's been a lot. He's been on many television stations, CNN, Fox News, MSNBC, NBC, CBS, the list goes on and on and on. A true authority in personal finance. He's a personal finance expert. So be sure to pick up one of his books, if not for yourself, maybe for a gift for a friend. But we'd like to get back. Kathy, let's keep on moving. We've got a lot of questions, and Jordan has a ton of info to give us.
Yes, we do. Well, since we're plugging his book that just came out this week, I'm going to plug it again. It's right here. And in your book, Master Your Debt, you talk about, I love this. This is chapter 6. You talk about mortgage equity acceleration. What I want to know, Jordan, is this something that everybody can utilize? It's it blew my mind when I started reading it. You got to tell us about it.
It's not for everybody. It's for a lot of people. But basically, what mortgage equity acceleration is, and I think this is the first time it's ever been written up in a book, actually, is allowing you to pay your mortgage off in about 5 to 7 years instead of 30 years with a payment that goes down every month. Now, that sounds impossible, but that's in fact the way it works. Okay, so I'm about to save you tens of thousands of dollars and about 25 years off your mortgage. All right. Now let's explain this briefly. And I have a lot of charts and so on and showing it in more detail in the book. But okay, with a traditional 30-year mortgage, you make the same payment for 360 payments, and the first 10 to 15 years, pretty much all interest. After 15 years, you might have paid off 10 or 15% of the principal, very, very small amount. And then the principal goes after that. So the bank gets its money up front. In the end, you'll typically pay about 3 times in interest what you paid for the house in the first place. Now, people don't look at that when they're signing on the mortgage. So the number is there, but they're so infatuated about buying the home, they kind of don't notice this huge amount of interest. Not only the interest, but that it's front-end loaded. That's the traditional mortgage that a lot of people are used to. Okay. Now, and then, meanwhile, you're supposed to keep your paycheck in a checking account on which you earn 0. So this is the way the bank says you're supposed to get rich. Give us your money for free and pay us for 30 years with all the interest front-end loaded. Okay, and people seem to have bought this reason for some reason. Okay, this is what I call enslavement. All right. Now, I'm going to turn that process around completely and liberate you. And it takes a little bit of a mind twist to kind of get this, but I'm going to empower you completely instead of being enslaved. So, to make this work, you have to have a HELOC, home equity line of credit. A HELOC is a loan based on your house, which allows you to take money in and take money out whenever you like. All right, it's a flexible kind of what I call a two-way mousetrap. You can put money in whenever you want, take money out whenever you want. Whereas a traditional mortgage is a one-way mousetrap. You can put money in, but you can't get it back out again. Okay. So what you do is you keep your income, your paycheck and all your income, in a HELOC, in the home equity line of credit. HELOCs are based on what's called average daily balance. So every day that goes by, they say, how much do you owe? And if you have income in there, that's pushing down your principal. You obviously owe interest on the amount of principal that you owe. And since you're keeping your income in the HELOC, pushing down your principal, instead of in a checking account earning zero, you're making progress on the principal much, much faster. All right? And so what happens is every month that goes by, you are paying down an accelerating amount of principal and therefore paying less interest because you owe less interest on less principal. So your payment is going down every month, and typically you'll pay the whole thing off in about 5 years.
Wow.
At which point you have no mortgage and you still have your home equity line of credit access to your house. It sounds impossible. It sounds like there's no way this could possibly work, but in fact it does. There is a website, a free website, you can check this out, which is truthinequity.com, truthinequity.com. And on there, there's a little thing that says personal profile. And you fill in all the numbers that apply to your situation, your income, your expenses, your home value, your credit score, your mortgage rate, all these different things. And based on the numbers you put in there, you'll say, okay, based on those numbers, your payoff date is 5.6 years. And then you change the numbers, you change the interest rate, you change your income, you change your expenses, whatever it may be. You say, okay, based on those numbers, your payoff is 5.8 years or whatever it comes out to be. And then if that's of interest to you, they take you through the process step by step until you actually implement this thing. And people are absolutely amazed. You are now in control of your finances instead of being a victim. So the reason I call this book Master Your Debt is I want you to be the master of your debt, not a victim of your debt.
Love it.
So that's a very simple description of how what's called mortgage equity acceleration works.
You know, I got to tell you, we have coined this 100% free 100% of the time. Jordan Goodman, you just gave us a gift of thousands of dollars. That is absolutely amazing. I need to reread that one chapter again. Like you said, it has graphs and charts in there, and you have examples that, just lay it out very easy so that anybody can go in and read it and put it together and figure it out. You're an amazing man. You're amazing.
So the tables I have there, I've got one with a 15-year mortgage, and then doing it with the traditional way, and then doing mortgage acceleration. It pays off in about 6 years. And then I've got another one with a 30-year mortgage, and you pay it off in about 8 years, something like that.
Goodness.
Everything else is the same. I'm not changing your income.
Wow.
I'm not changing your expenses. Anything else, the way you cash flow through your house becomes your bank. Think of it that way. And it empowers you completely. And not only does it pay off your mortgage, but you are now in control of your finances. Okay? It's almost like self-banking to some extent, because you know what's going on, and you immediately know the impact of any move you make. So if you say, okay, my kid's going to college, so I've got an extra expense, so let's put that in the HELOC. Okay, that'll add another year to my payoff. My income just went up, so I'll put that in there. All right, well, that just took 4 months off my payoff. There's a lot of moving parts all the time,
Wow.
and you can instantly see the impact of any change on your payoff date right there.
You've just blown my mind. It's so.
Jordan, this begs a question. For some of us that, especially in Southern California, where houses are now underwater without us having to do anything. They've lost a lot of value. Do you have any words of wisdom for what people do who have lost a lot of value in their homes and might even be holding an arm that they need to get rid
Good
of?
question.
As long as you have a home equity line of credit, this will work. Okay?
Mhm.
If you need a HELOC to make this work. Now, if you don't have a HELOC and you're underwater, this is not going to work for you. Okay? There's 3 things you need to qualify for mortgage equity acceleration. The first one is positive cash flow. You're going to have more income coming in than expenses because that positive cash flow is what's paying down your principal. The second thing you need is positive equity in your home, at least at some point, so you can qualify for the HELOC. If you're deep underwater, nobody's going to give you a HELOC because you have no equity. And the third thing you need is a credit score of maybe 680 or higher to be able to qualify for the HELOC if you don't already have one. Now, there are many, many Americans who have those three criteria. In fact, they already have a HELOC sitting vacant, doing nothing. They're absolutely sitting on a gold mine and don't even realize. It's like having a Maserati in the garage and not knowing how to drive it, you know? So a lot of people have what they need, they just don't know how to use it. And that's what these people at Truth and Equity do, by the way, is they do not sell anything. They just are consultants that help you step by step understand. It takes a mind shift to kind of get this. Yeah. Once you get it, and their experience is that people actually get into this and pay the mortgage off faster than projected because they find other money that's sitting there idle that they can now use to pay off that debt. So their projection is 5.6 years. It actually comes out to 4 years or something because people get so enthusiastic about, oh, I have this little IRA over that's doing nothing. Let's get that in there and pay that mortgage down. And then once your mortgage is paid off, you still have access to your credit line.
Wow.
Okay? So the first part is what I just said, is paying your mortgage off. But the second part is now you have your mortgage paid off. You can use that home equity to invest in some of the things we talked about before. So remember that home equity line is based on the prime rate, which today is 3.25%. So you can borrow it 3.25%. The HELOC I have is actually 1% below prime. I'm at 2.25%. Now maybe we can't everybody get that, but you can get HELOCs even at prime. Say you borrow at 3.25% and take some money and put that in the royalty trust we talked about before, earning 10%, and make that grow for your retirement. So I've just funded your retirement on your house for free.
What?
Right?
That's amazing.
Very nice.
There's a lot of things you can do once you have that money. So it makes a huge difference, not only financially, but psychologically, that you're in control for the first time. Banks, by the way, do not want you to know about this. You can go to a bank and say, I'd like a mortgage equity acceleration program. And they say, what are you talking about? They've never heard about it. Because they like you to keep your money in a checking account earning zero and pay them for 30 years. So why would they want to tell you about something like this? I'm a little bit revolutionary.
Jordan is full of this kind of information. Once I listened to you, Jordan, you came up and you introduced us to a mortgage that, if you recall, the mortgage, as the interest rates went down, they're pretty low now, but as the interest rates go down, so does your payment and your interest rate. It would actually track with interest rates going down. And if the interest rates went up, it would not go up. So it wasn't variable. It just would go down all the time. He brought this to, I mean, this is the incredible stuff that Jordan will tell you about in his books. Just phenomenal
I'll explain
stuff.
that a little bit further. This is what's called the automatic rate cut mortgage, or ARC loan. And you can find out about it at arcloan.com, ARCLOAN.com, or their phone number 800-ARC-LOAN. So what happens is it starts at the current market rate, and whenever rates fall a quarter point or more, it goes down with no closing costs, points, or fees. If rates go up, it doesn't affect you. You're just locked at lower and lower rates like that. I personally have an ARC loan. It started 9 years ago in February 2001 at 7.75%. It has come down 7 times, and it's now at 4.5%, and it'll never go up.
Goodness.
That's a good thing.
Oh my gosh.
Most people are in the opposite situation. They've got a mortgage where the rate only goes up and not down, and that's why they're falling behind and getting foreclosed upon and so on. So the ARC loan is something that's available. There's only one place I know that offers it, at arcloan.com, and they deal nationally, and I've just saved you a few $100,000 more.
Okay, well, not only that, going back to the price of precious metal early on in the call, I live in gold country, Jordan, so I think I'm going to break out my pan and I'm going to start panning tomorrow.
Good idea. Good idea.
Yeah.
The gold's going much higher. It really is. It really is. So it's worth getting that pan out there.
Well, another thing that's really hot right now is the whole deal with the credit card law that's going to be taking effect. Isn't it February 22nd, I think?
Correct.
And I believe
I'm going to be on The View. I'm going to be on The View with Whoopi Goldberg and Barbara Walters on February 22nd. That's right. So I'll say hello to all of you for Whoopi.
Yeah, wave. I'm going to tape it.
Your ear.
Oh yeah, do the Carol Burnett thing. What I would like to know is what does it mean to us? I read a little bit about it, and I've got to be honest with you, it's totally confusing. And how can we prepare ahead of time when we've only got a couple of weeks to go?
Okay, first of all, expectations are higher than reality when it comes to this credit card legislation. People have the impression that the banks are all of a sudden going to become good guys, and rates, which are now at 29%, are going to go back to 6% like the good old days. That is not about to happen. Okay, so I don't want to disabuse you of your optimism, but what happened is what used to be a ceiling has now become a floor, right? 29% was like as high as you could ever imagine a credit card rate be. Now that's where they're starting, okay? Because they raised all their rates in anticipation of this credit card bill going into effect. So it's not going to be nirvana, hardly. Now let me just tell you briefly some of the things that it's what's called the Credit Card Holders Bill of Rights are going to go into effect, as you say, February 22nd. The first one are rate protections. There used to be something called the Universal Default Clause, which meant if you were late on your phone bill or anything else, the credit card companies could see it and instantly jack up your rates, even though you hadn't paid the credit card companies late. Okay, it's pretty outrageous, but they did that all the time. That is not going to happen anymore. You actually have to pay them late for them to jack up your rate, not something else. Okay. Another thing is they're going to have to give you 45 days notice on when they raise your rates. In the past, they would just raise it right away. So, okay, we're going to hit you over the head as opposed to just hitting you over the head. So it doesn't make it that much better, but at least you have some notice about these kind of things. Also, when you have an outstanding balance that has two different interest rates on it, say one's 3.9% and one's 25%, in the past, all your payments would go towards the lower interest first and then the higher interest. You couldn't get to the higher interest to pay it off, right? Now that has been reversed, so your payments go to the high interest first and then to the low interest. So that's a little bit of a better kind of thing. So they have to give you 21 days grace period now, which they've not been doing in the past. They're going to have more clear language, supposedly, although I have to see it to believe it. That's actually going to be clear. And they are not allowed to solicit people under 21 anymore unless you have your own income or you get your parents to co-sign. So, when you go to the football game and they're handing out credit cards to anybody who breathes, now the parents are going to have to go along with them and sign on the dotted line. So, those are just a sampling of some of the things in this credit card law. But it's not going to bring rates back to lower levels. Fees are not going to go away. You just kind of get more notice when they hit you over the head, putting it very briefly. If that makes you feel better, Kathy.
Darn it, it doesn't. I was hoping that they were going to lower the interest rates and, give us 30 days to pay, and, beyond the 30 days. Darn, nothing favorable in my mind.
Well, the way the banks look at it, okay, they say we are going to lose about $20 billion on the various ways that we can't, abuse customers. So it's not like, all right, we're going to make $20 billion less. It's like, how else can we make $20 billion to make up for what we're losing? Okay, that's the way they look at it.
Right.
So they're going to be adding annual fees on cards that have not had annual fees in the past. They will be making the rewards program less rewarding in various ways. There's going to be all kinds of ways of them trying to make money. And basically what they're going to do, what I've been saying is they're going to punish the responsible and bail out the irresponsible. I mean, that's kind of the way we're doing in society today anyway, with the big banks and all that. So if you've been paying on time for your whole life, in the past you used to be called a good customer, okay? Now you're going to be called a freeloader because they get money out of you somehow. So that's the way the banks kind of look at this thing, is how can we get money out of people who have not gotten money out in the past?
Well, I don't know if this is significant, but I have a card that's always, forever and always has been due on the 23rd of the month. And I got a notice a couple of days ago, and they changed it to the 22nd. Is that significant or no?
Not
I
particularly.
don't know if they were
often,
trying to whack me one day ahead or what they were doing.
well, one thing you got to be careful about is the banks, in many cases, are putting the due dates on weekends. You try getting a payment in on a Sunday morning, it's not going to work too well, right? And now if you're late, they can jack up your interest rates and hit you with a late fee. One of the other little tricks that's being stopped by this bill is they used to have a due time of 9 in the morning. And so, the postman had kind of a slow day today, so, you got the payment in, but it didn't get posted till 10 a.m. and they jack up your rates. Now it has to be 5 p.m. I mean, little things like that might help some, but it's not this nirvana that people are kind of thinking it's going to be.
Well,
Wow.
one of our viewers is saying, what will high balances do to your credit, and what balance percentage of the balance should you not go over on credit cards?
Well, your credit score is made up of several different things, and the percentage of your potential outstanding balance that you're using is one of those elements. If you're over 50%, you're asking for trouble, basically. So I would try to keep the percentage of your outstanding balance below 50%. Now, what a lot of credit card companies have been doing is lowering people's credit limits dramatically, therefore hurting your credit score. Say you had a $10,000 credit line and you owed $4,000 on it, so you're using 40% of your line. Now they lower the limit from $10,000 to $5,000. You haven't done anything, and now you owe 80% of your limit. That just hurt your credit score. Aren't the banks wonderful?
Yeah.
It actually happened to every one of my cards.
So it hurts your score. When your credit limit goes down, your score goes down because your percentage of outstanding balance goes up dramatically.
Let me
Were you
ask
aware
you
of that,
something.
JW?
No, say it again.
Were you
What's
aware
that?
of that? That it was hurting your credit score when they were doing that?
No, I am aware of that, and it sucks. Let me ask you a question. I have all my credit cards don't have fees, and they're very low. They're, for the most part, they're very low percentages. But I notice every once in a while that the percentages go up, and also a fee shows up out of nowhere. So I used to just be able to call and get those taken off. Is that going to go away?
You can complain, but no, they're going to. You're exactly. JW is an example. He's our paragon of virtue here. Okay, he's always done everything right. He's paid on time. You were a freeloader, JW, as they would say. Okay, they're now trying to extract money from you that they haven't gotten in the past. So that fee that they hit you with that they never did in the past, that's an example. Higher rates for doing nothing wrong. That's the kind of thing that's happening. So that's the trend. Is the responsible people who've always done everything right, you know, they were considered great customers, are now considered the sacrificial lambs to pay for all the sins of the people who are not doing things right. If that makes you feel any better, GW.
Oh yeah, much better. Thank you. Please don't understand. I will now understand how I'm being screwed.
That's good. Understanding helps, hopefully.
Yeah.
Now,
No,
let me
one
give
of
you some
our
solutions.
viewers put robbery with exclamation point. It is kind of like highway robbery. It's just ridiculous, you know?
These are the banks that we bailed out with hundreds of billions of dollars, by the way.
Oh, that just makes me want to throw up. That's.
Let me give you some solutions, though. I don't want to just give you the problem. I always try to give you a solution. There are websites where you can find the best credit cards out there. You don't have to put up with this at all. There are some much better deals out there. Okay. So if you have the book there on page 89, I list 4 websites where you can find the best credit cards right now. And those are creditcardperks, PERKS.com, credit.com, indexcreditcards.com, and lowcards.com. And on those sites are all the best deals out there. Now, it happens that there's one state in the country that's famous for low-interest credit cards. Do you know what that is, Kathy? Which state that is?
No, I'm not familiar with that.
Arkansas.
Arkansas?
Arkansas has usury ceilings left over from the Depression where they cannot charge more than 5% over the prime rate. And the prime rate today is 3.25%, so they can't charge more than 8%, basically. So if you go to Arkansas, any of the sites I just gave you will give you the list of the low-interest credit cards that are permanently low. You have to have decent credit to get them. And now you're getting a rate of 7 or 8%. And, you know, as long as you pay on time, they're not going to hit you with huge fees and 29% interest rates and all that kind of thing. So there's for example, there's Arkansas Federal, Simmons Bank. There's one called Iberia Bank. There's a whole bunch of them happen to be based in Arkansas where they have low interest rates. So you can do something. Now you have to do something. You have to go to these websites, get these cards, as opposed to just waiting for whatever shows up in the mail, which is the way most people do it.
Yeah.
Right.
How true.
And they will let you apply out of state, correct?
Totally. Absolutely.
That is,
Most of their
that's
business is out of state.
unbelievable.
So I just saved you several $1,000s on that too.
No kid. Well, I'll tell you what. We're all going to be able to take a month off here with all this money that we're making and saving here. I love it.
You know, I've been
That's
awfully
incredible.
I've been awfully quiet in the background over here, but please excuse me. I was booking my travel to Barbados with all this new money I've just found. So this is awesome, incredible information. My goodness. Let's switch gears real quick. We have so many more questions we'd like to get through, and we are getting close to our 1 hour time limit. Jordan, if it's okay with you and you, JW, would you be okay to go a little longer and maybe
Absolutely.
get some
Absolutely.
input
That's
from our
Yeah.
fantastic? Because
I'm great.
I
I'm good.
literally have goosebumps, and I don't get excited that easy when it comes to just talking about finance and money. But holy smoke, this is incredible. Let's switch gears a little bit. Let's talk
He
about
never got to student loans yet.
yeah. Well, I was going to talk
He
about
never got to student loans yet.
right. Yeah, that's coming.
Should I just
Go ahead.
That's
We'll do
coming.
that later. Okay, I can pay off your student loans right away too. Yeah.
Okay, well let's jump into that then. You know, saving for our children's college education is just as important as ever. It's difficult too with all of our mortgages and things, but now that you fixed that, it will be much easier. What can we do to maximize our savings or utilize student loans to our best advantage?
Okay, the earlier you save, the more you'll have and the less you have to borrow. You know, people think, oh, it's great, I'm going to qualify for financial aid. Financial aid is loans. Okay, it's not a great privilege to get financial aid, in the most part. There are some grants and scholarships, but most of it is loans. People are coming out of college today with $100,000, $150,000 in debt. And then they go to graduate school. You know, medical school is another $300,000 in debt on top of that, and law school, the same kind of thing. So people are coming out of school with huge, with student loans that are bigger than mortgages in many cases. It's just unbelievable. There are now 55 colleges in this country with tuitions over $50,000. And my son happens to be in one of them, so at Dartmouth. So, I mean, this is what's happening to people all over the place. So the more you save up front, the less you have to borrow when you get there. Probably one of the better ways to save is a so-called Section 529 plan, where you can grow the money tax-free as long as you use it for college education. And there's some very good plans out there that can give you very good investment choices. So set it up so on an automatic basis you're putting money into that plan. In many states, you can actually get a tax deduction, a state tax deduction for contributions to 529 plans. But the main thing is to put money in and have it grow so that when you get to college, you don't have to borrow quite as much.
Is there
Get to college, the whole world of student loans is changing dramatically. It had been in the past that private lenders, private banks, were making student loans subsidized by the government. The Obama administration basically wants to take the private banks out of that business and have everybody work directly with the Department of Education. They think that by saving that subsidy, they're going to save money. We'll see. I tend to doubt the government's going to run it better than the private banks, but we'll have to see. But that's the direction things are going. If you're out of school already and you have a lot of student loans, people don't seem to realize you can settle these student loans for 50 cents on the dollar and be done with these things much sooner. You don't have to be paying on it for 30 years. There's a place that can help you do that called National Student Loan Relief, and their phone number is 877-702-DEBT, D-E-B-T. And that's all they do is they negotiate, and they do this all day with Sallie Mae and Chase Manhattan Bank and Citibank and all these lenders to get your student loans taken care of years sooner than you ever thought. So I just saved you a few $100,000 more there.
Well, I've got to tell you, Jordan, one of our viewers said, Jordan, I think I love you. I'm buying your book.
Okay, I'll take that as a compliment. That's good.
That's a great
Just to make sure they know, my overall website is moneyanswers.com.
right.
And the website for Master Your Debt is master-yourdebt.com. I tried to get masteryourdebt.com, but there was a cyber squatter. I couldn't get off the property, so master-yourdebt.com. And then the Fast Profits one is fastprofitsinhardtimes.com. That came out 2 years ago, and in fact helped a lot of people as well. So they're direct websites, or they're all linked through moneyanswers.com, and I'm crazy enough to take emails there directly as well.
Fantastic. And in addition to that, we have that also beneath us. You see the books beneath us. Click directly on the book of interest, or click on both and find out which one or both are best for you. And be sure to grab a copy. This no matter what, if those books cost $500, are they worth it? If you're me, yes, I would pay $500. This information is unbelievable. And we have an expert on our panel. This is a guy. This is a person for the people. He doesn't have a hidden agenda. He's not out to sell anything. He's here to provide information and help people. It's phenomenal. We can't. I'm goose. Let's keep going. We've got more questions.
Okay.
This is great. These are just nugget after nugget after nugget. Go ahead, Kathy. Go ahead and go hit us with the next one on the cars there.
Well, yeah, I wanted to talk about car dealerships. I live up here in Grass Valley, population a little over 12,000, and we had 3 car dealerships, and now we have 1. So they're disappearing like crazy, not in small towns, but in big towns all over the country. So is this a good time to buy a new car, and how can we get the best deal?
Okay, well, it may seem like there's less competition because you have fewer dealers, but if you do it right, there's actually more competition and you can do even better than the past. What I recommend, I have a whole chapter in Master Your Debt about this, is to use an independent car buying service that will shop for you in a zone of 100 or 200 miles around you to have the dealers work against each other to get you the best possible deal. My favorite one is called carq.com, C-A-R, the letter Q.com. Their phone number, 800-517-2277. There's a woman who runs it named Linda Goldberg, who's actually in the San Francisco area. And she is a fearless consumer advocate that helps people get great deals on a car. I'll tell you my own personal story. I bought my last 3 cars through Linda. I have an Infiniti M35. I had it before. I went back to the dealer where I had gotten the car and said, okay, my lease is up. I want to get another one. And I got the whole thing laid out. I then faxed that deal, which it was so good that the sales manager was writhing on the floor saying, I've never given anybody such a good deal, and so on. So I fell for the whole thing. So I faxed the invoice to Linda, and within a day, she beat it by $4,000.
Wow.
She went to another dealer. I'm in the New York area, so that was New Jersey. I ended up going to Brooklyn, so I spent, an hour going out of my way to save $4,000. She charges a fee of about $300 or $400 depending on which service you get. So I'm willing to spend $300 to save $4,000 and know I'm getting the best possible deal.
Absolutely.
Okay, because there's a lot of tricks involved with buying cars. For example, in the case with my Infiniti, there was a rebate from Infiniti to the dealer of $4,000 if they got the sale in by the end of the month. Linda gets all these memos, okay? And so she said, to the dealer, give him the rebate. And so I went back to the original guy just to say, and I had it with me, and I say, why didn't you give me the $4,000 rebate? He said, well, you're not supposed to know about that. I said, oh, okay. Here's the memo that you got, So there's tricks going on all the time that you as a Joe average who buys a car every 5 years, you don't have a clue at. So she is an independent. She takes no kickbacks. There are a lot of people who say they're car buyer services. They're actually front men for the dealers, and they get paid by the dealers to bring in customers. So that's why I like an independent one who's not conflicted that way. So again, carq.com, 800-517-2277. She's helped many, many people save tons of money on cars, trade-ins, helping you figure out leasing, buying, what's best in your situation. So we just saved you several $1,000s on that as well.
Yeah, that's awesome. Pack your bags. Barbados, here we come.
I just switched to Australia. I'm going to Australia now. It's getting better.
Pick up some gold coins when you're there.
There we go.
Yeah.
Absolutely.
Hey, let me ask you, Jordan. You talk, and we're some hard times for some people. When do you know that bankruptcy is the way to go, or is it?
For some people, it is. The bankruptcy laws were changed in 2005, and you might remember in October when that went into effect, there were lines around all the bankruptcy courts, everybody doing last minute. Everybody I guess they have to do drive-by bankruptcies just as everything else, last minute thing. But that was to make it, that law was called the Bankruptcy Abuse Protection Act. It was to protect the banks against the people going bankrupt. It wasn't for the bankrupt people, and so it was to make it harder for people to go bankrupt. Now, there's 2 kinds of bankruptcies. There's Chapter 7, which is a liquidation of your debt, and there's Chapter 13, which is a rescheduling of your debt over a longer period of time. And most people think, oh, I'm going to go bankrupt. I'm going to get rid of my debt completely and get a fresh start. That's Chapter 7. This new law that went into effect in 2005 made it almost impossible for most people to get a Chapter 7. For example, they have what's called a means test, which means you cannot go bankrupt with a Chapter 7 if your income is at or above the median in your state. So a lot of people have incomes, their expenses overwhelm them. So they're going to do a Chapter 13 and reschedule it over time. So it made it very, very hard. Now, what's happened recently is there have still been more Chapter 7s than 13s because people who went into 13, it didn't work, and they ended up in 7 anyway. But at least the creditors got more blood out of the stone before they completely crushed them, is basically what happened. So there are times for bankruptcies, but it's not an easy road. Let me give you some help. If you have a lot of unsecured credit card debt, there are some very helpful organizations out there that can help you. What you want to do is to go to a national, nonprofit credit counseling organization because they have deals with the creditors you cannot possibly get on your own. My favorite one is called Cambridge Credit Counseling. Their phone number, 800-897-2200. Their website, cambridgecredit.org. Notice they're a .org. They're a nonprofit 501c3. They have deals with Chase, Citibank, Bank of America, Capital One, Discover, all these places to get you rates of typically about 6% and pay off your debt in typically about 3 to 4 years.
Wow.
As opposed to you paying 29% for the rest of your life and your children's lives, basically. That's going to, and you consolidate all your debt into one payment. They get it right in your account once a month, pay the creditors, and typically it takes about 3 or 4 years to get out of debt. Now, that's a nonprofit credit counseling organization. Again, cambridgecredit.org or 800-897-2200. Now, this is a completely different kettle of fish from what you hear advertised all the time, which are called debt settlement companies, which are for-profit companies, which I say stay away from completely. What debt settlement companies do is they say, okay, come with us, make all of your payments to us, we'll put it in escrow, and of course they take the fees out up front. And then 4 or 5 months later, they threaten the creditors and say, if you don't give us 50 cents on the dollar, we're going to go bankrupt on you. The creditors do not take this well. First of all, as you're not paying them, they go crazy. They're calling and writing and emailing you and threatening all kinds of things to you. So your life is not exactly pleasant that way. And then, when the moment of truth comes, they don't cooperate with these debt settlement companies. You'll hear ads all the time. You have the right to settle your debt. It's totally false. If you go to the Federal Trade Commission website, ftc.gov, and type in debt settlement, you'll just see an endless supply of scams and closures and just horrible things with debt settlement. So people often confuse nonprofit credit counseling like Cambridge with for-profit debt settlement, which they hear a lot more. Those are two completely different animals. Debt settlement kills your credit because your debt is being charged off if they agree to it. Nonprofit credit counseling is considered a neutral on your credit score. You'll be what's part of a debt management plan, or DMP. It's considered neutral, and pretty soon you get your credit back because your debt's paid off. So people often confuse those two. There's a very big difference between them.
And you just answered my next question, which was, what's the hit to your credit when you do the settlement? So
when you do a settlement, if the bank accepts it, which in many cases they don't, it's going to be a charge-off. If you've taken 50 cents on the dollar, you now have not paid 50 cents on the dollar. And this is the other little catch here: the other 50 cents that was forgiven, you get a 1099 for it. It's considered imputed income. So you owe $100,000, settle it for $50,000, you get a 1099 for $50,000 that was forgiven. They don't usually tell you about that either.
Wow.
So I would avoid the debt settlement companies, frankly.
Sounds like good advice.
Absolutely.
Kathy looks like she's about to throw up here, I think.
I do? Yeah. You know what? It really bothers me that so much of this is kept secret and we don't know this. I'm just so thankful that we have somebody like you, Jordan, to dispel all the myths and put all of this valuable information out here that's truly going to help people. It's just so well taken. It's just amazing.
I love to do it. There's not
thing
enough financial education going on in schools. People go through college and learn about Aristotle and geometry, all kinds of wonderful things, but not how to get a good credit card or your credit score or debt settlement or mortgages, all these things we've been talking about. People are in a total fog about these kind of things, unfortunately.
Well, the other thing that I want to say too, and in reading the Master Your Debt book, and I was saying this to you earlier, you interject some really fun things. Sometimes finances cannot be so fun, but you
Right.
really interject some just great fun within the book that helps the everyday layman who is not financially on top of things be able to read it and figure it out and understand it. And I really appreciate that. I'm sure there's a lot of other people out there like me that, when you start looking at some of that stuff, if it's not put in easy terms, sometimes it can be hard to palate and digest. So
They make it hard on
it's
purpose.
it's just a real appreciated read, that's for sure.
Great. Appreciate
Yeah.
it. No, they make it hard on purpose.
Yeah.
Just like what we were talking about, the traditional mortgage versus mortgage equity acceleration, the complete difference is you being in control versus you being a victim. And they put all kinds of legalese around it and make it, so complicated people can't figure it out. But if you have a HELOC, you already have your Maserati right there. They haven't even told you you have one. So it's just a matter of empowerment.
Well, the other thing I wanted to ask you is, what suggestions can you give somebody who is just in an emergency crisis situation? They don't have their job, they don't have any money in the bank, they've lost their home. What can you tell us, for somebody in that kind of situation?
Well, there is some help available, but it's happening to a lot of people. I mean, we had 3 million people lose their homes last year. Now, there's a lot of things for rent because there's homes available, so you may be able to get it that way. But I mean, hopefully, there's a lot of steps you can take before you get to that kind of level. Mortgage modification is one thing that might help people. There's a website that can help people do that, which is modifymymortgage.com. They also have a phone number, which is 800-MODIFY-ME, and it's run by the former commissioner of HUD, who knows how to help people get mortgage modifications. This is another area you have to be careful in. There were a lot of people, particularly in California, but all over the place, who, in the boom, were selling subprime loans to people who couldn't afford them. And then when that dried up, they said, all right, well, let's see what else we can do next. So let's do mortgage modifications instead. So the same people who got you into trouble in the first place now say they're going to get you out of trouble, and they get you into even more trouble again. So you got to deal with a reputable place, and modifymymortgage.com, is that kind of place. So you want to head off trouble if you possibly can. As far as mortgage modifications, what you want to do is you have to sell yourself to the bank as to why you deserve a mortgage modification. Here's my income. My payment's $1,200 a month, but I really could afford $900. You show them all the numbers, and then you have to kind of break through the bureaucracy to get it. Last year, there was, 3 million foreclosures. There were about 300,000 people that got modifications. Most of those were temporary. Only about 30,000 got permanent modifications. So it's a whole process to go through. The banks are completely overwhelmed with this whole process, and you need somebody on your side to make it work. So that's one thing you can do to hopefully prevent the kind of disaster you're talking about.
Oh, that's great. That's really good information, because I think sometimes when people get into that position, they don't know where to turn and they don't know what to do. It just seems like there's nobody out there to help them. So, and that's information that you have in your book, Mastering Your Debt as well. A lot of great information to help people. The other thing that I want to talk about is your other book. Your Fast Profits and Hard Times offers several suggestions to invest and profit in the environment that we're in. So can you give us a few examples on that,
Sure.
Jordan?
Sure. Okay, some of the things we haven't talked about. One of them is tax liens. And this is where somebody does not pay their property tax on time. A lien is placed on their property by the local municipality, and that lien is then auctioned to people who buy it. The municipality gets its tax revenue that it wouldn't get otherwise, and you get, at the worst, you get the stated interest rate of that state, and at best, the person doesn't pay their property taxes at all, and you get to buy their home for the amount of the property taxes. So in California, but all over the place, there are these tons and tons of liens out there. Each state's a little bit different. I think California is 18%. Some states are, Texas is the highest, it's 50%. So if you bought a tax lien in Texas and somebody pays their property tax back, they have to pay back the property tax plus the penalty interest rate. So you get back your money and a 50% return. That's the worst you can do. The best you can do is you buy a property worth $200,000, $300,000 for $5,000 or $6,000 or whatever it may be, and then you get to sell the house or you rent it or whatever you like. So tax liens is something that actually benefits by this environment. And there are many, many more tax liens than there are investors who know how to play this game. So have you had experience with those, JW? I know you're in the real estate market.
Yes, actually have, and one of my partners is an expert at tax liens.
So you can do it. It's a little bit of a specialty to learn, but it's not that hard. And there's tons of tax liens around. And in many cases, you just go into the local municipality and just like, what do you got? There's nobody competing with you. And it depends on the status what the interest rate is. But there's a very simple thing that benefits by the current economic environment. That's what I mean by fast profits in hard times. There's only going to be more tax liens available all the time. All right? So that's one. I'll give you another example. There are what are called cash flow factoring. Now, in hard times when you have a credit crunch, as we have today, what happens is businesses need access to cash. So they're willing to sell their receivables at a discount to get cash now. There's a whole bunch of different cash flow factoring techniques. I'll just give you a few examples. What are just called business inventory, business receivables factoring. So there's, say, a doctor's office, okay? And he's owed lots of money by Medicare and Medicaid and health insurance companies, but he's getting paid slower and slower, and he needs money to pay his rent and his employees and so on. So he may be able to sell his receivables at, say, 5 cents off the dollar. So he'll get 95 cents right now and give up 5 cents. And when the bills are paid by Medicare, Medicaid, and so on, the investor gets 5%. Now that's 5% over like 2 or 3 months. So the annual return can be like 30% or something like that. Just keep doing it one after another. So that's the medical receivables. Another example would be lottery winners. Okay, somebody just won a $10 million lottery, and it's going to be paid out over 20 years. So that's a cash flow that's assured for the next 20 years. So you go to the guy and say, instead of waiting 20 years, how about if I gave you $4 million right now? Okay, and he said, great, I want to go spending. So, you give him $4 million, and then you get $10 million over the next 20 years locked in. That's cash flow factoring. So there's lots of ways of doing it. In a tight economy, cash flow factoring benefits because it's a way of people getting cash when they can't get credit from the bank. So that's another example.
Wasn't it Bill Bartman who made billions of dollars doing that same thing with credit card debt?
Exactly. Credit card debt's another one. Credit card debt, in many cases, it's written off. You can buy credit card debt for 2 or 3 or 4 cents on the dollar. And if you can threaten somebody to pay you 10 cents on the dollar, you've just doubled your money. It's pretty ruthless, but that's what people do.
Yeah. My goodness.
But when you get a call from some credit card debt that you gave up on 10 years ago, somebody has bought that debt, is trying to squeeze whatever they can out of you because they bought it for a penny or two. And if they can get you to pay 10 cents, you're making them rich. So that's a more evil form of cash flow factoring, I guess you might say.
The dark side of cash flow factoring.
The other thing I would say is I have a whole chapter on passive income opportunities. And if you do it right, this is the absolute best time to do passive income, where you set something up and it makes money in your sleep. I think, Kathy, you have to make more money in your sleep. You're working too hard these days,
I know, that sounds very nice. I like the passive income strategy. What is that about?
All right, so there's a whole bunch of different ways of doing that. I actually put a website together for that, which is growmyincome.com. Growmyincome.com. And there's also a phone number, 877-GROW-MY-INCOME. So I've got a whole series of different possibilities there. I'll just give you a few examples. And these are things I do myself as well. One of them is called Financial Destination Inc., FDI. And it's a service that helps people improve their personal finances in all kinds of ways. It gives them a 24-hour concierge service. It cuts their phone bill by 90%, something called FDI Voice. It gives them a financial plan. It helps them with their credit, all kinds of different things. And when you sign somebody up, then you get a piece of their monthly subscription. So The highest level is called first class membership, which is $130 a month. So if I were to sign up Kathy and she did 130, I would get 25 of every 130 that she pays. So once you signed up, as long as you stay a member, I'm getting $25 a month from you in my sleep. And then if you sign up Brian, I'll get $10 from Brian, and you get $25 of Brian's money. And then if Brian signs up JW, you'd each get a piece, and I would get $5 of JW's money. So each level down, you get a piece of it on an ongoing basis. I know a second grade teacher in Baltimore who started this 3 years ago. He's now making $600,000 a month because he signed up most of Baltimore, basically. And it's helping people with their personal finances and creating a huge flow of passive income. So that's one example. Another example
I like it.
is something called ADZOO, ADZZOO. And what ADZOO does is what's called geocentric marketing. And what it does is it allows the local business to get at the top of the Google search listings, the so-called search engine optimization. Now, that's something big and medium-sized businesses can do, but your local flower shop or restaurant or pizza shop is not going to know how to do search engine optimization. Right. So this brings search engine optimization to the local guy and allows them to get on the top of Google listings and bring in more business. So it costs the business about $100 a month, depending on which plan they get, and you get about $60 of that $100 per month every time that business stays on there. So the way I like to look at it is you go down Main Street and you sign up all your businesses, and now the businesses are working for you instead of the other way around.
Yeah.
Right? Because they're paying you every month while you're sleeping. So that's called ADZOO. There's a whole bunch of different things, but this is the era of passive income.
I love that concept. Bring it to me passively. Yes, while I'm sleeping. I could use some sleep, so let's get this going right now. All right.
I'll tell you what. Go ahead.
I'm just saying there's loads of other. We've gone on too long here, but if there are some questions, I'd be glad to answer any questions if you had email questions there.
Let me take a look here. The ones that I gave you were kind of as we're going, and I'm looking to see if anybody has added. I'm just saying thank you very much. Great information. They're all compliments.
Oh,
and then
okay.
There's something. They're all compliments. Thank you and thanking. And I don't understand this. It's Kavit Impator. I think it means like empower. I'm guessing. I don't understand.
That's what it is. Caveat means buyer beware.
Oh, okay. Well, that's what it is. Okay. I thought it was empower yourself.
The reason Jordan doesn't get any questions is mainly because he gives so much information. He tells you about something and says, oh, yeah, here's 3 websites, here's the phone numbers, and here's the people who own the company. Like, what do you have left to ask?
Well, actually, we did have somebody ask him to repeat some websites, but I said it was on page 89 of the book.
Yes.
Oh, there you go.
No, I like to give out gems. Okay, I'll give those out again. Those are the ones to get better credit cards, okay? One of them is Credit Card Perks, PERKS.com. Another one is Credit.com. The next one is IndexCreditCards.com. And the last one is LowCards.com. And between those 4, you'll get loads of choices of the best credit cards anywhere out there with low rates, low fees, good grace periods, rewards points, secured credit cards. If you've got trouble with your credit, you can get a secured credit card and then therefore get credit when you've had trouble in the past. So they're all on there. You just have to go get them. I would say the greatest 2 forces in personal finance are inertia and apathy. People don't do and they don't care. I don't understand why, but that's the truth. They would rather just accept what comes to them, like the bad credit card offers that come in the mail.
Yeah.
The bank says, take this mortgage, so I'll just take it, The broker says, do this, so they do that. I mean, people are just very inert about all this stuff. And what I'm saying is, take control. Do some things. Make a huge difference. I mean, the difference in 30-year mortgage versus mortgage acceleration is the difference between slavery and empowerment. So it takes a little bit of effort. You got to learn about this, but the difference is just enormous in your financial life and your feeling of control. And that's what I like empowering people about.
And now they have.
I'll tell you what. I absolutely feel empowered. I feel very
Great.
empowered right now.
Yeah, for anybody who says, okay, well, I don't know how to do that, now you're empowered because you have the books. Go get the books. It lays it out pretty nice and easily. It's not hard. It's not a hard read. You don't have to, when he was talking about graphs and charts and notes, they're not really tough ones. He lays it out very, very nicely. Your books are astounding. We never went over the money type. I never even understood that whole deal, the money type. But that's the next one I'm going to read.
Well, that's understanding your financial personality.
Oh, okay.
That's understanding your financial personality. And basically, I'll just very briefly go over that. There are 6 different types of personalities that people have. And understanding what your personality is makes a big difference in, how you make different kinds of financial decisions. The financial personalities are, in no particular order, the debt desperado. We've talked about those a little bit tonight. The striver, the kind of entrepreneur. The high roller, people who think nothing can ever go wrong. The coaster, which thinks everything's going to go fine until they fall off a cliff. The ostrich that doesn't care about any of this stuff and thinks it'll all take care of itself. And the squirrel is totally in fear of all things going wrong at all times. Those are my 6 money types that I go into more detail. And it's a book called Master Your Money Type.
And which one do you want to be?
You want to be some combination. And when you
Okay.
get married to somebody, know what their money type is. You get real trouble if you have a high roller and a squirrel, for example. It really causes a lot of On the other hand, if you have 2 high rollers or 2 squirrels, that can be kind of trouble too. So
Yeah.
understand when you're dating somebody what kind of money type they are. It makes it for an interesting conversation.
I was going to say, yeah, my bizarre sense of humor started to take off there. So with that, I'm gonna say thank you. I just want to thank you from the bottom of my heart. Not only has it been an extreme pleasure meeting you and spending time with you, I got to talk with you a little bit last Thursday evening, just sharing yourself with all of our viewers and with Brian and I and JW. And JW, thank you so much again for introducing us and bringing such a fantastic man into our life and into our show to share with all of our viewers. I just really, from the bottom of my heart, Jordan, thank you so much. I just feel like I became a millionaire in the last, little bit of an hour. So thank you so much for giving us all of those great nuggets.
I just want you to take action.
We're all going to be able to use. Yes.
I just want you to take action, okay? You've heard about some great stuff, but if you don't act on it, it's not going to do you any good. So get out of that inertia mode.
Yeah, step number 1.
Absolutely. And Brian, I'm going to turn it back over to you.
Take action. That was a great way to segue into the end of this thing. Take action. Step number 1, get his book so you have it in front of you at all times for reference. There was a lot of information dispelled on this show. Get both books. They're incredible. Jordan is incredible. He's here for us, not for some corporation or any other interest. He is for mainstream America, and that's what I love about this guy. He does have a wonderful sense of humor. He's an easy read. My goodness, I was reading his book. It flows beautifully. He's an excellent writer. Very easy to understand. Puts it in layman's terms. I can't recommend him higher. He just saved everybody on this show. I don't know. I lost count, but I've booked my 2nd trip to Australia now because I know I have all this money coming in. But JW, I also want to mirror what Kathy said. Like you said to me once, you're a brother by a different mother. I love that. And, the more I get to know you, the more I feel genuinely that way. And I just truly appreciate your friendship and your partnership as well. But Jordan, absolutely just cannot thank you enough for being on our show. If you want to say one parting shot, I know we didn't really tell you that this would be an opportunity, but this would be a great time just to say one parting shot. Take action was a great one, and then we'll close it up right after that.
Well, as we've looked at the overall situation, if you do the things we talked about, you can do fantastically. If you have 10% interest you're earning, you pay your mortgage off in 5 years, you get low interest credit cards, pay off your student loans, get good deals on cars, all the things we talked about, you're in great shape. If you don't do these things and you're paying 29% on your interest rates and your credit cards, you're earning nothing on your savings, you're paying 30 years on your mortgage, you're not in such great shape. So the difference and the choice is yours as to whether you implement these things or not. And again, I'm glad to take emails at moneyanswers.com. There's a little Ask Jordan button. I love to help people follow up. They tell me all their stories afterwards, the real stuff, and I love to help them if I can.
Fantastic.
Perfect.
All right, with that, we went an extra half hour. Unbelievable content. This video is recorded. You will know that obviously when you're watching this recorded, but for those watching it live still, you can access it anytime on our website. Be sure to go back to it. Be sure to pick up his books. Take action. Without further ado, I'd like to close this edition of the Internet Citadel Show. Again, thank you, Kathy, so much. Thank you, Jordan. Thank you, JW. We'll see you all once
Brian,
again next
JW.
week. Bye-bye now.
All right.
Good night.